Welcome to Module 4, Project Allocator. In this module, we'll have an overview of how Allocator works. We'll also discuss how to use Allocator and how to set up Allocator. We'll review under the overview what Allocator can do, the type of projects and the type of projects we could have and the billing related to them. Also the allocation methods and the posting options. To recap where we've come so far, we already have discussed that we can create financials in the financial modules and bring them over to project using financial transaction transfer. We also have discussed how to create and post time cards and expense reports. And so the next step of our process is to review allocation processor. Then we'll talk about billing, and we'll also in this session talk about indirect rate calculator. So what can Allocator do? When you think about your projects, you need to have a lot of things going on. So just the costs related to the projects are not the sum total of the data related to the total costs on your projects. We'll have direct costs that come from AP, GL, purchasing, but that may not represent all the costs that we have on a specific job. So we need help from Allocator to provide that additional reporting information. So we can create new transactions from Allocator both into general ledger and to project. We can also create billing lines. We can add fees to our jobs, and we can also add indirect costs such as fringe, overhead, and G&A to our projects. Allocator can also be used to reclassify items recorded into WIP as well. So if we think about the type of projects we would have, there are T&M jobs, or time and material jobs. And these have items posted throughout the month. The costs are posted all throughout the month. Then we use Allocator to apply those billing rates. And then we will use flexible billings to bill those transactions created by Allocator. The second type of project we could have are cost-plus projects. And these are typically government jobs. And we would handle those the same as we would time and material jobs in the fact that we have costs posted throughout the month, except we would not apply billing rates using Allocator, but instead we would apply indirect rates using Allocator. And then we would still flow these records over to billing to flow the records created by Allocator over to billing. The third type of job we have are cost-plus or fixed-price jobs. And these fixed-price jobs also have costs collected all month as well. Some of those amounts may be, you may want to float over to billing, but not all of them. So we can take some of those costs and bring those through Allocator, but then the other items would be entered directly into billing as fixed billing amounts. Because Allocator and billing are so closely related, what we do in Allocator, we also usually need to do in billing as far as posting rules. And so we'll discuss today, or through this session, how to handle the allocation setup. And then once we get to the billing session, we'll talk about how to handle the setup of the postings there as well. Allocator will create time card transactions, and normally it will be to unbilled AR and unbilled revenue. Or we can go directly to revenue with our postings. And then flexible billings will relieve the unbilled AR and unbilled revenue and then post directly to AR and revenue. Cost plus, same concept. We don't have much difference as far as the postings that we normally do with that. But a fixed price job, if you have direct costs that you are allowed to bill, we would handle those the same as time and materials. But usually the fixed price portion of the invoice will post directly to accounts receivable and revenue. We won't go through unbilled AR and unbilled revenue. We're going to now break down into each of the project types and talk about how those will vary when we set them up in billing or in Allocator. So the first type that we've been going through is a time and materials job. So from an allocation method perspective, we need labor, and usually our billing for those is by units. The subcontract, we would also bill most often by units, but sometimes we might just bill the amounts that the subs charge us directly. We also will have materials or other direct costs, and typically we would have these costs and we would mark them up by some kind of percentage. Then we could have travel costs that are billed at cost normally and travel time. So Allocator will be used to apply the billing rates based on the allocation method and billing rules. Here's an example of a sample allocation method. I'll show you in the product so it'll be a little easier to see. This is an example of a time and materials. At this point, we're just going to review the first part of it. Now, when you look at allocation methods, sometimes customers get a little confused at looking at them. So most of the time, we don't expect the customer to set these up, but we would set them up for you, and then you would just be able to learn how to read them and understand them. In case something's not posting correctly, then you at least have ability to assess how it's supposed to be working. So keeping in mind we want to apply a billing rate to labor. So generally we would go find our labor records and we would mark them up. Now you'll notice we have steps going down the side. So these steps just indicate what can happen. Future steps or later steps can rely on results of previous steps. On a time and materials job, we really don't need that. Instead, what we want to do is we want to multiply the units. Let's go over here. We would apply the units times some kind of labor rate. So here's my units, and I'm going to multiply them times the labor rate. So we would do that same concept throughout. So we'd take our subcontract cost, or our units, times also a rate that we find. Now travel, we said we want to bill based on the amount of travel that incurred. So here, we don't base it on the units, we're going to base the travel based on the amount. And the same thing with materials. We want to base the material that we're going to bill based on the amount as well. And so within each step, we can identify how we're going to mark up or apply those. Now let's look at a cost plus example. So cost plus is a little bit different in the fact that we get all of our costs. We don't care about the units most often. Here's our labor costs and our indirect costs. And so each one of these are going to be identical. So when it comes to a cost plus job, the primary thing that we have to always find are the amounts. Go find all the amounts that were generated to the project, and then we'll apply some kind of indirect cost rate. So it's usually fringe, overhead, G&A. Depending on the kind of cost, whether it's labor, we'll apply fringe, and then we apply overhead to fringe and labor, and so forth. So there's dependencies on previous costs to generate the indirect rates as well. So with the allocation method, we need to be able to reference a prior set of steps in order to generate another cost on it. So each one of these is the cost plus the indirect cost, but each one is handled a little differently. So let's go look at indirect allocation method. Okay, so we'll pull up cost plus. And here's the cost plus method. And it's a little different in the fact that because we want to grab the labor and the subs, again, we go get our labor, which is here. And we're going to then apply burden to it. So we're going to take the amount of labor we find and we're going to apply a burden rate. And then we're also going to take the amount of subs we find, cost there, and we're going to apply an overhead rate. But the overhead rate is actually not just on the sub, it's on the prior steps. So we have step 100 to 400. So everything that was calculated here we'll apply overhead to. So because we calculated on the previous step, we can now calculate it on this calculate the overhead on both the fringe, labor, and subcontract. Then for materials, we would have G&A on all of this. So we go get our other direct costs, which are here. We'd calculate what those are. And then we can apply a G&A rate to everything before. So step 100 to 600. So here's step 100. So everything calculated, labor, fringe, subs, overhead, direct costs, all of these get a G&A rate applied to them. So it's a little time consuming, and just you have to be careful on when you set these up, but they are very powerful. They can do a lot of different things for you related to your allocations. Now, if you think about a fixed price job, it's a little bit different. We usually, our labor is normally included in the fixed price that we charge, or the amount we came up with to charge the customer for the fixed price amount. But we might have some incidental costs or costs that was not included in that fixed price, such as travel costs and things like that. So we want to be able to pass along those costs via Allocator so we can still bill them, but not also bill the fixed price. So if we look here on the same concept for fixed price, usually labor and subs, we're going to bill the fixed amount. And so you'll see on these lines there is no labor or subs even listed, but instead we're going to bring over maybe travel, other direct costs if we can charge for them, and we'll apply these at their cost. So we would just go grab the rate, go grab the cost here, and then multiply it by just 1, and that would be a pass-through that would then flow over to the invoice. So let's review where we've come so far as posting. All the stuff on the left we've already talked about, but when Allocator runs, in previous conversations we've said stuff comes from AP, payroll, inventory, over to project. In this instance, Allocator is actually going to generate records, and it's going to push it to both project and back to general ledger. So when we generate records from Allocator on the GL side, we would get unbilled AR and unbilled revenue for the 5550, and then we would also get labor or project postings to those same account categories, unbilled AR and unbilled revenue. We have 2 posting options when it comes to how Allocator posts and billing posts. From a simple perspective, when we think of accounting, the common posting would be debit to accounts receivable and credit to revenue. If we are using Allocator, typically we would want to not go directly to AR and revenue, because timing-wise we have not set out that invoice yet. So instead we would rather generate a posting to unbilled AR and unbilled revenue, so that later when the invoice is created we would relieve unbilled AR and unbilled revenue. So if we look at the 2 options we have available to us related to Allocator and billings, we'll see that the left side shows that the allocation method will create unbilled AR and unbilled revenue. Then at the time the invoice is created, we generate a record, we clear out unbilled AR and clear out unbilled revenue, and then hit AR and revenue. However, we do have an alternate posting option where we, during allocation, instead of going to both unbilled AR and unbilled revenue, we go to unbilled AR, but we post it directly to revenue at that time. And then at the time that the invoice is created, we will relieve unbilled AR and post directly to accounts receivable. This gives your accounting staff more control over timing of revenue and billing, so that based on the project types and at the time of the time in the billing cycle where you generate the invoices might be a consideration into which posting model that you use. The next item we talk about is using Allocator. Under Allocation Method Setup, we'll also talk about Allocation Processor and Recalculation. Allocation Method Setup, we have quite a few things to discuss related to that, and it's really into 5 different parts. We want to identify account categories to be allocated. We want to define how they will be allocated. We want to define postings to project in part 3 and postings to GL in part 4. And then we want to define the level of detail of those postings. So the first part is defining the allocation method setup. We've already discussed these steps and how those relate, and all allocation methods are based on the account category. So I'm going to open allocation method setup. The account category can be set up as a range of accounts. So if I wanted to go from labor to labor premium for my labor calculations, I could put labor in the start and labor premium in the end. And then all the account categories in between will be handled the same way. Similarly with subcontract, any of these lines, we can put a range in. So this can impact how you create your account categories, because if you have a lot of accounts that you want to allocate, if you have variation of accounts in between these, then that will limit your ability to do ranges. So you may want to group them in a way that you can put certain sets of accounts together so you don't have to create more lines. The only thing would be is if you want to do both labor and labor premium and there was something in between, you would have to just create a second line and put the labor premium on the second line. And it would handle it the same, but it would just be more maintenance to review and make sure are correct. The account categories become one of the primary things that we use. So that means that that's very important when you're determining your GL relationships to your account categories, that you choose the right relationships so that your allocation can process correctly. The second step is how are the accounts allocated and what rates do we use? So this rate type is what is going to be used for the next step. Going back to my allocation method. You'll notice I have a rate type here. And this rate type is the thing that drives which rates. So these are pretty straightforward. There's nothing magical about the rates. I have rates set up. I have labor rates set up. I have expense rates set up. They're just it can be up to a 2-character field to identify and make it unique. So then everything that comes through this line is going to go look at this rate type to determine what rate to apply to these units. And once that rate type is determined, then that will multiply it by the units that it finds and create the postings for the allocation. We can have multiple posting options. So we can post to general ledger in both. We can have a line item post to GL or not post to GL in just a project. We can post only to project, we can post to both, and we can post just to general ledger as well. So if we go through this a little bit deeper here, let me pull up this other screen. So once we find the rates, then we're going to have to determine how do we want to post it. Now, this calculation type here determines what happens on this line. So I'm grabbing my labor, I'm taking everything that I find labor-wise in units, I'm going to multiply it by a billing rate that I find, and then I'm going to do something with it. And this column tells me what I'm going to do with it. So I'm calculating it, so it calculated the amount. So I had 40 hours, and I'm going to bill at $100 an hour. So this line says 40 hours of labor, go find the units, times $100 an hour, and then what I'm going to do with that. I'm going to calculate and I'm going to post it. So I'm calculated the $4,000. Now what am I going to post it to? And so these next set of columns represent the postings that will happen when Allocator runs. So from here to here is the project posting. So you notice I have kind of some odd information in the post-project column, it has all S's. And this is a masking feature that allows us to post to the source project. So when you see S's, that means that it will always post back to whatever project it originated from. And then we also have a post task, and it will also post back to the same task or the source task that the original record was posted to. Then we have the project posting, and in this instance we call it unbilled work performed, which is essentially the same thing as unbilled AR. It's just we're differentiating unbilled AR into two types of expenses, or two types of accounts, one based on work and one based on expenses. So this is essentially posting to your unbilled AR. And then I'm going to post a secondary posting to the unbilled revenue that we had talked about. Again, I'm posting that back to the masking of the S's. I'm going to put this in form view because it's a little easier to follow. So here I have my posting to my project under S's and posting to my account category, unbilled work performed. Then I'm going to do a secondary posting to unbilled revenue. So that's the project posting component. Now I want to do a GL posting component. Which company am I going to post to, and which accounts am I going to post to? So account 1190, if I look here, is an AR holding and is also the same count that's on unbilled work performed. So because I'm putting this to unbilled work performed, I want to be consistent and use the same GL account to post that to as well. Then I can define the sub-account. We'll come back to that. And then I can define which company that I'm posting the credit to as well. And then the offset is my unbilled revenue account, essentially 3032. And then I also have a sub-account posting as well. Now here we see another masking scenario that we have available to us. So this is, because it's a balance sheet account, most often we post balance sheet to a default 00 account. So that's what the last portion of this sub-account is. But we also have a posting to the first two fields of the project sub-account. So if we'll go back and we'll look at our project, and the idea is that if a project has a sub-account associated with it, then that might be the sub-account we want to be able to track it to for purposes of both revenue and unbilled AR or unbilled revenue. So by being able to reference to that project, that gives us a little more detailed tracking back to general ledger. So let's look and see what sub-account we had associated to the project. So in the project, the CO123, we can see that the first two fields of the sub-account are CO. And so when this revenue, when this posting occurs, it's going to go to all zeros, but it's going to find out what are those first two sub-account segments on the project, which happens to be CO, and it will post to that. Now on the credit side, we don't care about, we want the entire project string for the sub-account, which just happens to be in this instance CO and all zeros as well, but these could be something different. And if whatever's in these segments here is what this credit side will post to. So we can have both project and GL, and just project or general ledger. So let's think about some things related to why we would not want project posting or GL postings in all instances. If we're applying indirect rate postings such as fringe, overhead, and G&A, those costs have already been accounted for on our financials or our general ledger when the cost came in. So when we get our payroll invoice, and when we have our payroll costs and our rent and things like that, those are already accounted for in general ledger. So we don't want to post those back to general ledger again. So that would be an instance where we'd only have project postings. There might be instances where we want to reclassify something that occurs in GL, but we don't really need the cost in project necessarily. So in those instances, we would create a GL posting, but not a project posting. The most common scenario is both GL and project, but we would have instances where we would want to vary from that. So this is a recap of the third part of the project postings, defining, or the allocation method, defining our project postings. So here's the example of the S's. If you accidentally type a mask in there that's not approved by or recognized by the system, it will make them capital. So let's say I put D's in there for detail, because I thought detail is an appropriate mask for the project posting. If I type D's in there, when I tab off of it, it would make them capital D's rather than lowercase d's, so that you would know that that would be an invalid choice in those as a masking. Then the fourth step is to generate, to create the GL postings, which we also reviewed, so we can do masking any combination of these. So I could go PP, 3 zeros, PP, all the way through. So any combination we can use if we want to reference back to the project or the task. The fifth part of the allocation method is defining the level of detail for our postings. The detail boxes affect how billing records display. So this is very important related to generating invoices. This also comes back to the type of projects that you have. So generally speaking, time and material projects, we always want the detail to flow over. If you think about it, we have a time card with my labor hours on it and my labor class. And generally speaking, we would want that on the invoice so that the customer knew that I worked on the project and I had so many hours on that job. Now we can, even if the detail posts to this invoice, we can still group it over there once it gets there if that's the preference. But generally speaking, we want it to flow over with to the fact that it is labor and that it belongs to me. Now, on cost plus jobs, though, we don't want that labor to come over. When we calculate our indirect rates, such as fringe, overhead, and G&A, we don't want those showing on the invoice as labor, but instead we want those showing on the invoice as fringe, overhead, and G&A. So when we generate those postings, we would not post those in detail, and so they would come over with the account that we created with Allocator. But the stuff we post in detail, the transactions we post in detail, like labor, would come over to the invoice with a reference of labor on it. So we have a lot of flexibility, and some of it we can show as the indirect costs, and others we can show as the source costs. So full detailed is required normally for time and material projects. Cost plus projects, we want to uncheck that detail box. I want to also show we have the full detail box, which if it's labor on the source record, then it will show as labor on the invoice. In addition to that, though, we can also send over the employee detail, like the employee name and things like that, and their sub-account detail. And then the third thing we want to usually consider is, do we want the units to flow over to the invoice as well? So most of the time we do want that. Then the last part of this is the allocation method is determining if you want to allocate non-billable. So generally speaking, on time and material jobs, we actually want this to be no. So if someone entered a time card as non-billable, we would not want that to be the billing amount calculated on it and have it flow over to the invoice. The allocate non-billable field is normally set to yes for cost plus type jobs, because especially to calculate the fringe, overhead, and G&A provisional costs onto the project, because even if a record is not billable on the project, on the invoicing side, it is something we want to account for in our costs, especially our indirect costs. If when it comes to cost plus jobs, we will have a different scenario. Let's look at that, cost plus. So cost plus we have very similar to what we already discussed. So in this instance, we can see the example of where we do not want to post to GL. So where we post the burden and the overhead and the G&A, these all have project postings, but you notice we do not have GL postings. Those postings are blank because they're already accounted for in general ledger. And usually on, okay, and then generally speaking on Cost Plus, we also can do a couple other things where we create these fringe overhead and G&A for purposes of costs, but we also can then generate, if we need to, a separate fringe overhead and G&A for billing. So we could repeat those same steps down here and create a separate or a different billing record for fringe overhead and G&A if the rates are different for billing than they are for your project costing. Now we want to discuss Allocation Processor and how does it find your rates in the data, and we'll run an example where you can see the results of some of the transactions we've been talking about. So back to a refresher as to the scenario that we discussed earlier in the course where we have materials of 500, we have direct labor of 40 units at $800 cost. We have $10 10 units, and $600 cost for subs, and then we have travel expenses of $250. So our cost overall is $21.50. Now we want to apply use our allocation method to apply billing, and we come up then with $55.50 as the total billing that we want to generate. So this is a great opportunity to look at Analyzer and see those costs as we've created them. So I'm going to look at my project that I have a sample project here that we've posted all those items to. So project 11, and I want to view my project costs. And you'll see at this point in time, I have a budget entered for $47.50 for my revenue. That's for the direct labor portion. And then I have 800, the $550, and the $250 that I'm expecting to go to revenue expense recovery. So that's for the materials and the travel. And so this is my labor revenue that I've budgeted, and this is my material and travel revenue. Now I have my costs that I have here. My $800 was my labor cost, $600 was my subcontract cost, materials were $500, and then my travel was $250. And you can see that I have my budget amount is the same for those. So my costs match exactly to my budget. So you'll notice the estimate to complete at this point is 0 for all those because I've met my budget. However, my revenue has nothing right now for my actuals here. So my estimate to complete for revenue is still $55.50 total. Okay? So if I drill down, I can see those costs just like we had talked about before. I can see that this record came from a labor record for Zoe Clark and for $800. And then this record came from a subcontract, and because it came from a vendor, it has the vendor name and the vendor number, which generated this record as well. Then my materials also came from an AP voucher, so I can see my material costs for $500 came from Graphic Design Institute. And then the final piece is from a travel expense report that was created by Zoe as well. So she drove 500 miles, and the mileage rate was 50 cents a mile, so that equaled $250 of costs. So all my costs are in here. Now I need to generate my revenue. So we want to use Allocator to create that. And so let's go run Allocation Processor. And so I'm going to go to Allocator, and then under Processor, I run Allocation Processor. I already have this queued up here. With Allocation Processor, we have the option to run in preliminary or final. Preliminary is just that. It gives us a chance to see what our numbers are before we run it. So when we run Allocator, there's quite a few things that will be happening. It will go out to your source transactions, all the ones we just looked at, labor, materials, based on the allocation method and the account categories that it was defined to look at. It goes and finds all those records in your transactions, and then it will run the process to determine what rates it's going to find and calculate them. And then once it does that, it'll generate it to a report where we can review the data and see if it looks correct. And if there's problems, then we would go back and fix whatever's wrong and run Allocator again. So I want to run it only for this job. And normally I put a cutoff date, and I will put a cutoff date. I'm just going to put today's date. And then if it creates transactions, what date is it going to put? And I'm going to put 01/31/98 because that's what my records show. Now I'm going to run processor. And so it's going and finding all the allocation method lines, going back to find the rates, and then determining how it's supposed to post them. So all the rules I just showed you is going through. So let's look at the reported generates to identify how Allocator is going to create these billing lines. So here we have unbilled expenses. So that's my travel and my materials. And we'll see that the 500 units, but the amount that it was posting off of is the 250. And it's going to post 201 times that amount. So my rate multiplier is 1 times the 250. So my pass-through of 250 is created to unbilled expenses. And then the same thing happens for materials. I create $500 is my amount, and I'm billing it at 1.1 times. I'm marking up 10%. So it's going to generate a billing record of 550. Then my labor is going to go to unbilled work performed, which is similar to my unbilled AR. Here I can see that I have the 10 units, and my billing rate for my subcontract was $75 a unit. And that equates to $800 of a billing line that's going to be created. And my Zoe, my architect, her 40 hours is going to bill at $100 an hour. And so I'm going to generate a billing line of $4,000. So the posting will be unbilled work performed of $47.50, and my unbilled expenses is $800, which matches my analyzer numbers of my budget. If I come back here, I'll see that $47.50 is my expected revenue for my labor, and $800 is my expected revenue for my expenses. So we're on track with that. Now, because we want unbilled AR and unbilled revenue both posted, we get the secondary postings as well. So we'll get a secondary posting to the revenue account too. Unbilled revenue here for the $4,000, and unbilled expenses here, unbilled expense revenue, excuse me, for $800. So these postings match what I'm looking for, and I would result into the revenue expenses that I desire. A secondary report is created when the process is run, and this is related to my GL posting. So the first part report was my project postings, and these are my GL postings. So we'll see the 1190 and the 3032, which are my unbilled AR and unbilled work performed, and my unbilled revenue as well. So we always will see the net balance to a specific posting is 0 unless you're posting between companies. Here's a recap of the report. The orange section is the unbilled AR components, and then the blue section is the unbilled revenue components. So they're offsetting each other, and they'll result in which shows 11,100 both for the debit and credit portion, but it's $55,550 for them individually. And here's an example of the GL posting report as well. There might be scenarios when we need to run recalculation. Recalculation will generate, we will need to run recalculation in a situation where the rates are incorrect. So let's say at the time that you first ran Allocator, the billing rate was $100 for the architect's labor. But then you found out from the project manager you can really bill $110, but you've already run Allocator and posted the allocation results. So what do you do now? You can correct the rate, and we'll show you how to set those rates up in a little while, but you can go and correct the rate from 100 to 110, and then you can run Allocator in recalc mode. So when we run it in recalculation, we'll see that we can designate the period of time we want to run it for, so a given month most likely, or a month, and we can narrow it down to a set of dates within that month. We can control which period it's going to post to. And instead of saying recalc no here, we would say recalculation yes. Now for Allocator to finish the processor, we have to change it from preliminary to final. So we would run it in final with recalc, and what it would do is it would back out the $4,000 of the 40 times 100 and put a negative 4,000, and then we'd get a positive number for 4,400, which would be 40 times the 110 billing rate.